I'm glad to hear that businesses are doing well. Earnings are strong. Yeah, I think that's consistent with continued strong growth. Economists look at GDP. That's the value of all the things that we produce. That's up 3% year over year through the second quarter of 2024. Things are slowing. Obviously, the job market is throttling back, but so far that's mostly by design. The Federal Reserve has been working hard to cool things off to get inflation back in the bottle, and I think they've succeeded. Hopefully, they start lowering interest rates here and keep the economy moving forward. But yeah, I think broadly so. I will say, businesses have certainly large businesses have been doing very, very well. Corporate profitability economy wide is about as good as it's ever been. I mean, margins are really extraordinary, and that's obviously, in part what's driving the equity market up to this point in time.
Mark, first of all, great to see you. I really appreciate you coming on the program. It's been a while since I talked to you. What about the consumer? We had reports yesterday from TripAdvisor not making as many bookings as people expected. The same was true with Airbnb. Disney came out this morning and said there's not as much growth at their parks, although people are staying home and ordering Disney Plus more often. Is the consumer in trouble here? Too much credit card debt from Taylor Swift last season? I mean, what's going on?
And it's good to hear your voice, Matt. Yeah, it's good to be on with you. Well, if you take consumers as a whole, the consumer elephant is a big thing, and a lot depends on which part of the elephant you're touching. But if you look at the elephant as a whole, it's good. Real consumer spending growth. That's after inflation, consumer spending all in, travel, the things that you've been talking about, what people are spending on streaming, all the things that they're buying for their homes, groceries, everything, up 2.5% year over year. I mean, that's been rock solid, amazingly so, for the last almost 2.5 to 3 years. And that's kind of right down the strike zone, right? That's exactly what you want to see. That's strong enough growth to keep the economy moving forward, but not too strong to fan those inflationary pressures. Now, if you touch different parts of the elephant, you start getting, a different sense of things. I mean, I do think lower income households are struggling, under the high interest rates and the credit card debt and consumer finance loans they took on back a couple, 3 years ago when, inflation was raging and they borrowed against their cards to supplement their income to maintain their purchasing power. And now the interest rates are very high. I mean, I just saw this the other day. I didn't realize that credit card interest rates at 22% are the highest they've ever been in the data that we have from the Federal Reserve. So, that is a lot of pressure. And those households blew through their excess saving early on, after the pandemic. So that part of the consumer elephant is soft and weak, and you can kind of hear it and feel it in some of the earnings announcements and what CEOs of consumer product companies are saying. But high-income households, middle-income households, no problem. They're fine. Just one last thing to say. The folks in the bottom third of the income distribution typically account for about 15% of the spending. The folks in the top third of the distribution account for 55% of the spending. So, I don't think the economy can flourish, and there's all kinds of political and social implications if folks in the bottom part of the distribution are struggling, but the economy can move forward, and it is. Now, I don't want to, I just say one last thing and I'll stop. Everything I said is positive, but things are weakening. The high interest rates are doing damage. I think it's time for the Federal Reserve to start lowering interest rates and lowering them quickly and normalizing rates. And they've been late to the game. They've made a misjudgment here, so they have to get moving. But at least so far, the consumer, the economy is hanging tough.